Okay, hello everyone. Thank you for joining us this afternoon. My name is Rob Livson. I am the sales associate here at Lightspeed. I'm joined today by Josh DiPietro, one of the best-selling authors who has over 15 years of active trading experience in U.S. equity markets. He's a best-selling author, a lot of experience, and he's been a long-time affiliate of Lightspeed Trading, so we're very happy to have him present some of his new strategies from his new book. Just before we get going, I just want to go over some of our brief disclosures. Please keep in mind that this presentation is for informational purposes only. Nothing presented today should be construed as investment advice or recommendation to buy or sell or hold any specific securities. Since we don't know everyone's investment objectives or risk tolerance, we're not endorsing any specific trading strategies. We do encourage you to ask questions, but we'd like to get to them by the end of the presentation. So feel free to type them in, and we will certainly try to answer them by the end of the webinar. This webinar will be recorded and uploaded to the Lightspeed website along with Josh's website as well. He's www.daytraderjosh.com. And along with our other webinars as well, you'll be able to view them at our library and be able to go back and reference them at a future date. Feel free to also contact me directly at sales@lightspeed.com or visit our website, lightspeed.com, for any other inquiries or requesting a demo of the Lightspeed software. Well, now I'm going to hand it over to Josh, and he's going to take you through his new Fusion system and show everyone a lot of useful information. So without further ado, I'm going to hand it over to Josh.
Thank you, Rob. Thank you very much for that well-informative and comprehensive introduction. And yes, I definitely want to first point out that the main focus of today is the Fusion trading system that is mapped out the framework in my newly published book that literally just launched a few weeks ago. And the entire webinar is around the focus of the book. So this is a great place to start. If you're watching this now live and you haven't read my book, this will definitely give you a great introduction to the book. And the book is definitely much more technical based than my second book. I'm sorry, the first book. Back in '09, I had The Truth About Day Trading Stocks. If anyone's tuning in now or anyone that will be watching this in the future, many of you have read my first book, and I just want to point out, and I will be doing this later on in the webinar, just point out many things have changed since '09, particularly the Fusion trading system. Without getting too much into the changes, I'm just going to kind of jump right to the Fusion Trading, which is the new book out, Day Trading Stocks the Wall Street Way. And that's pretty much going to set the tone for this entire webinar. Now, before I get started, I always like to really get a feel for who I'm speaking to. And these are questions that I typically ask when I'm in a live seminar because I want to fill out the crowd. Anyone who's listening right now, particularly Lightspeed traders, a lot of you already can answer most of these questions. A lot of you are full-time traders. I'm fully aware of that. But as such, many of you may not know anything about my Fusion system, may not have read any of my books, never had any previous webinars, which I've had several with Lightspeed, detailing my intraday strategy, the swing strategy, and I've always kept them separate. This particular webinar is going to do just the opposite. It is going to literally bring the fusion of all of them together, and ultimately you will be seeing my most current trading strategy up to date. And before I go any further, like I said, I want to get to know, and of course we can't ask back and forth, so just as Rob said in the beginning, you can ask the questions at the end. Obviously you can't ask me right now, and I can't ask you questions, but these are questions I'd like to know. Before going any further, I just kind of want to pre-warn you, there's going to be a lot of slides, a lot of technical, just a lot I'm going to throw at you in the next 45 minutes to 60 minutes. So if you've attended any of my previous seminars, been to my website, got it, there's some information on there. Read any of my feature articles for like Stocks and Commodities magazine. I'll be talking about that soon, but I'll just tell you right now, if you've read the August issue the Fusion Trading title. This entire webinar is based on not just that article, the same exact information and charts here and there. I did that for cohesion purposes, mainly because when you're just watching this webinar live right now, I'm going to pass on. You don't have time to digest the slides, so I did that for your sake, so you can go back to the website, my website, or if you have the actual, if you're subscribed to Stocks Commodities, go ahead and pick up the article again and reread it. But you will have the opportunity to go to my website. I've got the article on there so you can reread it. So a lot of this, you will have not only the webinar, you will also have the actual article to kind of give you that foundation. And of course, the book itself. I suggest this is a great place to start with the webinar. It's 1 hour, and then you read the article. And if it's not for you, this type of trading, well, then of course you don't want to go further and read the book. But for now, let's keep going here. Now, about you, there's about 10 different ways I can describe my system, even the framework. It really, I always ask in my training program, it all depends on how much experience you have. That's why, are you a full-time trader? Are you a greenhorn? Are you experienced? Are you a graduate of mine from 4 years ago coming back? So you have a good foundation of the intraday strategies that I'll be pointing out here. I really just need to know about you before I can describe the Fusion system. And later on, you'll understand what I mean by that, because the Fusion system on the surface, it has many, many facets to it. It is many moving parts, I like to phrase it that way. It can be tailored to the actual individual trader. So, and that's why I need to know, for instance, are you an equities trader? Or do you have any experience trading equities, Forex, futures, options? Have you been formally trained? And then that would suggest if you're not, then you're pretty much a greenhorn, or you've got 20 years of experience trading Forex, futures, options. I mean, everyone is different is my point. So the system will be traded differently depending on you. And the biggest of all is, of course, capital, how much capital you have, full-time trader. And that's why I always like to get a feel for that. And as I just said, here's the front cover. I actually had to take a snapshot of it. I couldn't, at the last minute, find an actual picture, or it was too small. But this is Stocks Commodities, again, Fusion Trading, the August 2015 issue, 6-page feature article. That's what this entire webinar will be based off of, with the exception there is more general information I'm going to give you following this slide, actually. The point is, at the end, toward the end of this webinar, I'm going to take you through a series of the trade setup that I use to show you the framework of the Fusion trading system, and that is in the Stocks and Commodities magazine. I always show this before I go any further. I have to caution you. It's not a disclosure of sorts. It's just a straight-up caution. I'm going to be showing you things that on the surface seem very simple. Certain entry points, certain guidelines, and I cannot stress it enough. What you're going to learn today is not to be used across the board in all situations on all stocks, and I just can't stress it enough. And I'm going to give you several examples of why not. But ultimately, yes, if you're trying any new system, whether it's my Fusion trading system or anything, or changing from equities to options, you need formal training on that. You don't just watch a webinar and then start applying it to the real markets, and it just can be a nightmare for you. So I always just want to remind you that what you're learning here, some of the things may seem like you can just apply them across the board unilaterally, and it'll work in all situations. That could not be further from the truth. Stock picking. What I'm going to do here, and this is something different that I've done in previous webinars. I'm going to start off with kind of reinventing my entire system, so to speak, on how I describe it. In the past, I would start with stock picking being one of the last things. So I'm basically going to give you an overview, kind of the bits and pieces, if you will, that have always been the same, whether you're intraday trading or swing trading, not just Fusion. Of course, starting with the stocks themselves. And I say simplifying the process, even though it is not that simple, but in general, again, this is all the framework here. Just in general, so you get an idea. Because if I start throwing levels at you and I don't tell you what type of stocks we're trading, it doesn't make sense. So I'm putting it in the right order this particular time, this webinar. So right there, stocks that I've traded, they're going to be between $100 and $250 max. They're typically going to be your blue chip stocks, the big boys like IBM, Goldman Sachs, any stock that's over 100. You want a minimum of 1 million shares traded, mainly because stocks that have high liquidity, you're going to have, for the most part, you're going to have your fills filled when you're trading in 100 share block trades. Or in some cases, you'll find out later that you can trade in 50 share block trades. But point is, if you have high liquidity, you're going to have much easier to get your fills. The higher price stocks, they tend to be traded much more consistent on Wall Street. You certainly don't have to worry about them dropping 50% in 10 minutes. Not to say that it can't happen, but it's just astronomically most likely not going to happen. The stocks the average stock for intraday price range should be about $2. And again, this is just general. It doesn't mean that they have to fit these, but in general, you're going to have stocks that are moving at least a couple dollars from high to low. They have high volume. They're over $100. And a couple of the ones at the bottom here, the one that I really should have highlighted the most is the fact that your stock must have consistent pre-market data. I can't tell you how many times I start trading the stock and then the pre-market data just dries up or it's non-existent altogether. You'll find out later on whether you already know my system or the intraday, or if even some of you are tuning in. I know that you're even currently in my training program, so you absolutely know how important pre-market data is. So it's got to have pre-market data. And that's anywhere from 4 a.m. Eastern Standard Time all the way to 9:29 minutes. Right up to the bell rings. There is that, and I'll give a little brief overview about that later on. The whole 10 stocks, you'll find out later on that my trading room, which I'm going to briefly show access to, just to give you show you the stocks and show you how it works. At most, I personally limit it to 10 stocks. Doesn't mean that you can't go more, and in many cases, I'm going to tell you, you shouldn't even be watching more than one stock, particularly when you first start off learning this system. Well, you're going to find that there is a lot of work involved to get the levels that we're trading. There's a lot of work, lots of work. So the more stocks you're watching, the more work it is. But it's not just about work. You don't want to overexpose yourself to too many stocks, because then you're going to end up making too many mistakes. It's just good old-fashioned don't bite off more than you can chew, so to speak. Now, the general framework, now that we know what type of stocks I'm trading in general, the fast movers, the Wall Street stocks, stocks over 100, here's the main thing that I kind of brush over, and that's why a lot of people get confused later in the webinar, because I failed to emphasize this frame right here, this slide. So go ahead and read it, and I'll read it off with you. But in general, this is a name that it's not necessarily, you won't find it, just like Fusion Trading, it's not a name that you're going to find in Wikipedia. Counter trend reversal trading, I more or less made that up myself. Counter trend is a phrase. I call it reversal because you're going to find that I am not trying to trend trade, and I'm not necessarily countering the trend either. What I'm doing is sitting on the sidelines just waiting for an extremely strong trend to hit extremely strong levels, then look for the reversal. That's about the simplest way I can phrase it. So in other words, I'm on the sidelines more than anything, and I only come in after huge moves, and on top of that, they hit a really strong level, and then even more so, which you'll find that I have it even go past that level before an entry, and all that just for a small, which we'll get to, a small profit. Relative to the big move. And the next slide, I believe, we'll get into the next couple slides. So, and this is really wordy right here. I very much just described everything here, particularly the sidelines and the keyword surpassed. I not only wait on the sidelines for levels to hit major trends, I also have it surpass that level. And I'm going to give specifics later on how much it surpasses, how I pick these levels. And again, just the framework. And I like to phrase it this way. Therefore, I never try to predict how far a trend will continue. I mean, in my opinion, unless you are the market maker and you know how much you're going to buy a stock up with your own millions of dollars, well then, it's virtually impossible to know how far a trend will continue. I don't predict trends. I just wait till the trend hits a strong level. And you're going to find in some cases, especially with stocks over $100, I'm waiting for it to run $20 in some cases. $20 run going up, and then I'll short after a $20 run, or it goes down $20. Then I finally come in to go long just for a small profit, very specific profits. So yeah, that eliminates an enormous amount of guesswork speculation. And price-driven, now another big key word. You're going to find that my system is strictly price-driven. Prices is everything. I'll be showing you how I have what's called a whiteboard later on. Just nothing but numbers on it. All numbers, all price levels. General framework continued. This right here, again, I'm glad I finally, to be honest with you, I apologize in the past. If you watched my webinars, they weren't, I want to say this is more uniform now because I'm really just taking the bare bones of what it is. I only use the daily candlestick chart and the 1 minute candlestick chart. I could talk hours about why and why not other charts, but in general, the daily candlestick chart certainly shows the stronger levels, and the 1 minute chart shows you your intraday newly forming levels. I wouldn't use a 5 minute chart because I'm missing out on the 5 candles that are in that one candlestick, for instance. And coincidentally, I have what's called a 5 candlestick rule for finding newly formed levels. I'll be showing you that later on as well. So once I use the daily candlestick chart, the 1 minute candlestick chart, and as far as entering each trade, again, where I was saying the word surpass, I not only wait for the resistance or support to break, I go anywhere from 50 cents pass to $2 plus. It just depends. There's so many variables, and that right there is pretty much the hardest part for anyone to learn this system. There's certain cases, certain scenarios, certain stocks, you go 50 cents pass. Other ones you want to wait $2. There's certain price levels. There's so many variables involved. It's never just a static across the board, always 50 cents. When it hits this level, you always do this. You're going to find that that is just so not true. Again, this is a system that works because it's hard. It is hard. There's a lot of moving parts. I've got over 100 strategies, or not strategies, excuse me, 100 procedures. It's more procedure-based than anything. Lots of procedures, collecting numbers, waiting for this to happen. If this, and this happens, then you do this, this, and this. And I have golden rules I'll be showing you coming up soon. Golden rules that kind of simplify a lot. Again, I mentioned this previously. Trade, not that I trade, and remember, it's not what I'm doing. It's what you should be doing. Should you be trading in 100 shares or 1,000 share blocks? It all depends on several factors. Now, that's a little off the screen here, but framework to acquire support and resistance. This is where the fusion comes into play. Now, I don't have a slide. I'm going to explain it to you. What I mean by fusion is that I have two, not systems that they're certainly not mutually exclusive, intraday levels versus swing levels. I used to keep them separate. Not anymore. It's much more precision trading when you do not separate the two. You use them in conjunction. They are not mutually exclusive. For instance, we start with the intraday setups, and intraday levels are, of course, anything that happens after the bell, which means future, which means you don't know what those levels are yet. That's newly formed levels. That's intraday levels. Prior levels, which are still intraday, not to confuse it, that's where it gets a little confusing, but they're still all intraday levels, such as pre-market. That's still happening in the moment. You don't know what it is yet because it's happening today. Previous day, and these are things that are on the next slide, but I'm just kind of jumping ahead. But in general, I want to separate intraday while I'm teaching, while I'm coaching you on this. And I do this in my training program. I start with intraday because you have to first learn intraday setups, how it works, because ultimately you're going to be intraday trading into a swing, and that's where the fusion comes in. So what is the framework to fusion? It's ultimately you're using intraday levels in conjunction with swing levels. And I'll get more specific on that coming up. So just to break it down though, and again, this is very generalized and I cannot caution it enough. This is where a lot of traders, and I can't tell you how many times I get questions from especially people who usually watch a webinar, certainly didn't read my book, and definitely weren't in my training program. They send me a message, or there's a blog out there, say, hey, I traded off previous day. I went 50 cents past it, and I lost $1,800. Your system sucks. Believe me, I get that all the time. And I have to remind you, these levels, just because I mentioned I trade previous day, I trade pre-market, that doesn't mean that you're trading off those levels in all situations. And this webinar is the first time I'm going to show you exactly why it's wrong to do that versus when it's right to do it. I'll get to that momentarily. But for now, just keep in mind these are levels that are very important for this system to work. You need to know your previous day high and low, your pre-market high and low, and your daily levels from the daily chart. You have highs and lows, and that, my comrades, is the hardest part of this system, is that daily chart. Because the daily chart is what's used for both intraday and swing. It's very hard, and that's why I'm going to try my best in a webinar to not confuse it without it sounding like it doesn't work. Because that's the problem with trying to do a webinar in 1 hour with slides, not in real time, and not spending an entire year with you. That's why my training program lasts a whole year. It takes a year to master this system. When I mention whiteboard, I'm just giving you, this is just a quick snapshot. The numbers on this are probably outdated. For LinkedIn, this is definitely outdated months ago, but it's just an example of numbers that I'm looking for. And anyone in my training program, they always have this on their wall every morning. And you're going to want one for every stock. I mean, I can give you several reasons why we use it, but the main reason why you want this for every stock is it's right there in front of you. And you don't need to be putting these on your screen because you're using up too many screens. Plus, I like to write things down literally because you get more in rhythm with your stock when you're actually writing it down. Plus, it's better for memory. Not to mention, it looks small here, but each letter is probably 3-inch font, so it's really big. So in case you're standing up and stretching after a long morning of trading, you can be 10 feet away and still see these numbers on the board. This is just an example chart. I'm not going to spend much time on it. It just shows you how I'm picking my high and low. Super simple stuff here, so I'm not going to spend any time. Just showing the high and low from the previous day. Pre-market, this obviously takes a lot of time, a lot of effort, and in many cases, depending on what trading platform you're using, some don't even have pre-market data. So, and again, that's why you have to have pre-market, or in my opinion, you're trading blind. If you don't know what Wall Street is doing before that bell rings, then you're trading blind. So you have to have, and you can see here in this chart, for the first time, mind you, my cursor's working. This whole time it wasn't working, but it's good timing because I have the charts up. You'll note the high up here. You'll see these little dots. Just because they're little dots, they have volume. These are real price hits. Oh, let me go back. Sorry about that. So, and this is something that I certainly focus on in my program, but for time's sake, I'm going to keep it simple. You have levels that hit in pre-market. You need to know the high and low because you have a high range, you have a high price and a low. That's your resistance support. How you use them, that's coming up. The daily chart price levels. Now, before I show you the daily chart, that's why I mentioned previously, the daily chart is hands down the hardest thing to teach. I take weeks and weeks and lots of homework and you back testing in between our phone conferences, or if I'm trading you or showing you live in person. It doesn't matter. Either way, it's you who has to learn this. But in general, and this is about as bare bones as I can have it be, but at the same time, I have to stress to you, do not take these two rules and think you're going to find the levels on the daily chart and you can trade them. There's so much more to it. This is just me reminding you how just in general, how I'm picking these levels. So you got this 4-day rule, and I'll show it to you on the next chart. And you can't have two levels within $1. Very critical. and the main reason, there's several reasons, but one of the biggest reasons why is because if you're going to trade two levels within $1, you might as well just be entering at one level with 200 shares. That's assuming you're getting in at 100 on each. They're just too close together, not strong enough. And again, sometimes it's 98 cents, or sometimes they're $1.32 apart. I don't use them, so it's not always exactly $1. That's where, and that's where it takes a lot of time getting good at looking at the charts and knowing which level is strong and which isn't. There's so many factors that come into play, but this is the general scope of it. So here, let me get my cursor out. Here's just an example, and I numbered them for you. I know it's a little sloppy, but basically we have this level right up here where I'm pointing, 234.83. These are real dates. You can actually, a real chart. So you can go back test this if you want later on. But essentially, this 234.83 is a resistance because it has 1, 2, 3, 4. And then it goes on 5, even 5, 6. But it has at least a minimum of 4 candlesticks to the left, to the right. So essentially, it's a pyramid shape. Yeah, I know it sounds so simple. Yeah, it's a pyramid, so trade it. No, not necessarily. But that is one standard to pick in your daily levels. Now, and then support, I show an example over here at the 214. You'll note that the very bottom, and mind you, the wick or the body, it doesn't matter. It's the low of the candle. It hit 214.52 on 116.15. And it had at least 4 days to the left, 4 days to the right. So in this case, it had a V shape. Again, for just the sake of the webinar and for general teaching, daily chart reading, that's about as far as I can go without much more involvement. I mentioned previously the 5 candlestick rule, newly formed. This is, don't confuse this at all with the daily chart. This is the 1-minute candlestick chart. Later on, you're gonna find that you can trade the newly formed levels, but they're always gonna be the low of the day or the high of the day. And that doesn't mean that you trade it just because it's the low of the day. It just means that that is a level you can consider. But how do you even know if it's a low of the day? Because when it's in real time and the market starts dropping or your stock just starts dropping precipitously or going up parabolically, how do you know it's where it's going to stop? You never know. But what you can do is at least wait 5 candlesticks, which is essentially 4 candlesticks to the right. That's why when I say 4, don't confuse it with the 4 days on the daily chart. And here's an example here. You have a low that formed at 157.87. Yes, this is an old chart, but it doesn't matter, obviously being 157. And Amazon, this isn't very old, but it's just strictly for showing you the candlestick rule. So you have a low here, and this is around 10 o'clock in the morning. So this was the low at the time. How did you know, though, that 157.87 was a low? You didn't know it at number 2. Number 2 could have blew right through it, $1. Kept going lower. What I'm saying is at least wait for 5 candles to hold. If it does, you've established a low. And then in this case, it kept going and going until it broke. Now, I could go on and talk about much more about intraday levels, how to trade the highs and lows, but what I'm going to do is just keep going on to what I call the golden rules. Because if you have these golden rules right here, in of themselves, they mean nothing. They're just a bunch of parameters, numbers, but once you know the system in its entirety, these golden rules, hands down, will keep you out of the poorhouse. I call it the poorhouse in at least 90% of situations. They are keeping you on the sidelines during huge moves. And the first one right here is what brings the fusion of this system together, that one golden rule. On all your initial capital INITIAL, initial trade setup, you must have at least one swing level within $3. Now here's the caveat. You don't know where your swing level is yet. I haven't even shown you how to pick swing levels yet. But at least you know that rule right now. So in other words, you can't possibly just dive into the market and start intraday trading, consistently intraday trading, and not have any clue where your swing levels are. Just, that's one way I could word it. But to keep it simple, assuming you know your swing level, do not start intraday trading until you're within $3 of it. Because in some cases, you could be $30 off your swing. And I trade stock, some of the other stocks you'll see in the room, LinkedIn, Tesla. These stocks can drop $40 in the course of a few days. And if you try intraday trading, say going long, and it's $30 off the swing, I can guarantee you that's probably a day where it dropped $12 to $15. But you weren't supposed to be intraday trading. You're supposed to be on the sidelines, waiting for it to be a severely oversold situation. Now, enough said on that. So going on, you probably read ahead, but I'll just kind of read it. There's a lot. It's really wordy here, but I got to read through them so I can stress them. Your initial entry can be off any newly formed intraday level or a prior level. If you recall, remember I told you the prior levels are your previous day high-low, your pre-market high-low, and your daily levels. That's prior levels. That means prior meaning anything before that bell rang. You already know those levels. They're established. You quantified them, and that's with the whiteboard, the picture of the whiteboard. All those numbers, those are your prior levels you have on there. Intraday high-low. Now, keyword now with this new system of fusion. Only intraday level I ever trade. And even in most cases, I don't even trade it. I tip it, but if you're going to trade an intraday, a newly formed level, a level you don't know yet, it's going to happen in the future on that day. It better be a low of the day or a high. No intermediate levels. If you're trading levels between the high and low, I call them intermediate levels. We're not trading that way anymore. I'll keep it real simple. There's just too much risk involved unless you're a high-frequency trader and you have a $10 million system and a guy from an MIT engineer knows how to run it for you. You just stay away from those intermediate levels. Get the big levels, stay on the sidelines, and wait for the big levels to hit. Then you come in and scrape out, I call it scraping out your little profit. And we'll get to the profits coming up. Because I know everybody wants to know how much do you make? How do you know when to exit? Because all I'm talking about now is establishing levels and entries. But it's the exit. That's always the hardest. Okay, moving on, the third bullet down. Always know your second entry before entering your first. Well, that should be followed with duh, of course. It would be great to know your second entry. How do you know that? Well, that's the beauty of this system. You better know that, and you will know it. You're going to have at least 3 levels at any given time that you know ahead of time you're waiting for. So there you go. If you don't have a second level, then you don't enter it first. And mind you, your first entry should be within $3 of your second. That way, if it runs against you, at most, you're going to get a $3 run, at most, before you have an even stronger level to enter at. That's one way of looking at it. Each entry, again, must be $1 apart. I mentioned that before. And that's for pretty much across the board with the new fusion system. There's never a time you're going to enter and have 2 trades within $1. If you are, you might as well have just jumped in with 200 shares. You have a maximum of 3 tiers, which basically means, again, this is intraday, so the most you'll have is a pre-market level, a previous day, and one of your daily levels, just to give you an example. You got to pick the 3 that are the strongest, and these are things that I teach. And like you may have 7 support levels. Which of those 7 are the strongest? Pick the bottom 3, just as an example. But that doesn't mean you always do that. Maybe you pick the first one and then skip the middle 3 and then wait for the last one. I'm just giving you an example. And there's situations where that's exactly what you should do. So it's just never across the board, apply these across the board. The golden rules continued. Now this, I kind of alluded to this before. For intraday, mind you, again, this is for the intraday level. So if you're going to trade a previous day, you're going to go 50 cents past it, because any prior level, you go 50 cents past. If it's the new low of the day, you go 25 cents past. But sometimes it's a full $1. Sometimes it's 50 cents. This is just in general. This is just to remind you that not only are we waiting for the level to hit, we're going past it before our entry. And it doesn't say it on here, but I should have it on here. it's the initial, and it's always that word initial, the initial time it breaks, and the initial time it hits 25 cents or 50 cents past. That's where you get your entry. If it hits it then pulls back, say your entire profit, well, guess what? The trade's over. You missed it. There's no confirmation after the fact with this system. Wall Street already made its money if you're trying to confirm a trade. You got to get in right on the initial breakouts. And all levels, 50 cents past to the bottom. Yeah, that's not necessarily true at all times as well, but it just gives you an idea that in the first 50 minutes of trading is the most highly volatile period of the day. So usually you want to get in at the most conservative entries. And these are things like that. That's one example. Depending on when your level hits, you do this, or this. So again, it's just that there's so many factors involved other than just pick a level, go 50 cents past it, and make your money. Couldn't be further from the truth. So here we are now. We're at swing trading. Remember, again, I'll keep reminding, we're separating intraday and how the intraday levels work from the swing trading levels, because they are different levels. How you approach those levels, how you trade them, that is the fusion. That's why it's the fusion of the two. So that's why I just wanted, so you don't get lost at this point, because this is usually where I start losing people. They're still caught up on the intraday. Let's just forget about intraday for one moment. Everything you've learned, pretty much just stop thinking about it. Just focus on swing trading right now and know that all your initial trade setups, you must have at least one swing level within $3 of your first entry. And that's another way of saying you can't enter an intraday trade unless you're within $3 of the swing. So that's where the fusion back and forth. You have to have a swing level within $3 or there is no entry. So now, with that said, let's find our swing levels, because you need to find your swing levels before you start trading. And at the bottom down here, you must learn and master intraday before swing. I think I've already well established that. And I definitely mentioned that they're not mutually exclusive. So again, the general framework is the same. And when it comes to counter trend reversal trading, it's all the same. The swings are just bigger, stronger levels, or the stock, and be more specific, swing levels have had much bigger moves in price before you enter versus an intraday. Because intraday levels, you're maybe just trading off of a $4 move because that's $4 from the previous day low, for example. Swing levels, on the other hand, like I mentioned before, it could be a Tesla where you literally needed it to drop $30 to $40 before it hit a level. Now, how we pick those levels, that's coming up. And again, just the framework. But in general, you got to know where your swing level is. You start with that, then you go back to intraday. And again, this is just framework, bulleted advice here. And again, not really, this isn't advice. These are rules. But these rules are not ironclad. There's many situations where they get changed up in certain situations. But to keep it simple, and even this isn't simple, I'm fully aware of that. That's why it's very hard to show these webinars in 1 hour and just kind of throw the whole shish kebab at you, so to speak. It's the same as intraday. You're still doing exactly the same. You're waiting on the sidelines for a major level to hit, and you come in and it goes past it. The difference is, this is why I'm putting the bullets here. The biggest difference is on the daily chart. Once you have those daily levels that I showed you, once they establish with the 4 days, the left to right, that's a level. And then there's no other level within $1, that's a daily level. But that daily level now has to hold for 10 additional days before it can be considered a swing level. And that on the surface sounds easy, and that's why I got to remind you, that's not always true. There's different situations, or I don't want you to just pick a level, think because it held 10 days, that's the level you trade. That'll make a little bit more sense when I start to show you some of the charts coming up. But for now, yeah, the biggest difference is the daily level now holds for 10 days. That's what makes it a swing level. In other words, daily levels are swing levels, but not all swing levels become day, or I'm sorry, I'm saying it backwards. Your all daily levels are intraday levels, but they do not become swing levels. Not all intraday, or not all daily levels are swing levels. And I'll show you this in my swing room, and I have snapshots of how they're all daily levels, but some of them become swing levels because they've held for 10 days, above the support for 10 days, if it's a support, or below a resistance, and then it's about ready to break out. That'll make sense coming up. This 5%, within 5%, that'll make sense on the upcoming chart where it's more visual, but essentially you have not only one swing level, you will have anywhere from one, but in some cases it's only one, meaning there's no other level within 5%. So if you got a $200 stock, that means that once you find your swing, $10, 5% of it, within $10 plus or minus, what other swing levels are there? Some cases you'll have 7. On average, there's probably 3. So you got 3 levels within 5%. Those are all levels you need to decide which one to trade first. That'll come up, and that is hands down the single hardest part of really all day trading, if you think about it. Where do you enter? You know, that's the whole point of picking levels. Well, this system not only tells you where to enter, it tells you where not to enter. And it shows you all of your options. So ultimately, this system, if done properly, you have many options. Like, for instance, just because I enter at a certain level does not mean you should have been entering at that level. I may have more experience than you, more capital. There's so many factors involved. You have 3 other trades you're in. You shouldn't be trading the 4th position. I mean, there's so many different factors that come into play. Just because someone's trading a level and it's a strong level does not mean you should be trading it. I could go on and on and on about that one, but I'll just leave it at that. Now, the amount of shares trading, I pretty much just said this. You know, it depends on how much capital you have. You got a minimum of 25K, the SEC regulations for pattern day trading, or you got millions of dollars. I've trained people that are definitely in the 7 digits, and I tell them, I don't care how much capital you have. You're still going to start off small, especially people with lots of capital. You don't know what you're doing. You're just going to lose more. So that just because you have more capital doesn't mean you should be trading more. And again, that's kind of what my first book is all about, regardless of the system being different. These are standard, almost logical, risk-adverse ways of thinking when you're getting into day trading. This is the profit taking. And this right here, obviously, is not across the board either. But in general, and it's mapped out here, you can digest it. In general, I break it down into brackets, your lower price stocks. When I say lower, it's relative, obviously. The 100 to 150, you would end up going 50 cents past them, but ultimately you're going to get $1.50 plus. I put the plus sign there. Let me get my cursor out. We're down here. If you're trading a $150 stock, that means that when it hits your swing, you're going to get a minimum of $1.50 pullback. That's what you're looking for. Now, plus means if you're holding it overnight, with swing levels bind you, you can hold overnight. I don't think I established that. When I say can, I didn't say should. I mean, these are things that especially in my training program, I give advice on. It's like just because you can doesn't mean you should. There's so many factors that come into play, but ultimately you need to make that decision. But the point is, it could gap up $5 overnight. So as soon as pre-market opens up, if you can exit in pre-market, most brokers nowadays will allow that. You get out immediately, and you've already made your profit before the bell rings. That's why I have the plus sign there. And the same goes for any stock over 150. It's $2. Most stocks are going to be about $2. So every time you enter, you're looking for a $2 run. Sheer in general. So that, for anyone who doesn't know the system at all, that's your answer right there. And I know everyone's waiting, dying to know how much do you make on every trade, how far do you go. I mean, and mind you, it's pure consistency. It's always that, never more, never less in most situations. For instance, I say up to $4 max. That's where it gets really involved. But the best way I can explain it here is if you have 2 tiers, and then it becomes an average, and your average is more than $2 profit, well, then you can take more than a $2 profit. But it's only intraday you max it at $4 because that's why the stocks that you're trading, they typically don't move more than $4. So why would you try to get a $8 run on a day where it may not? They typically only run $3 to $5. That's why you want to max it at $4. Then I give you strategies where after 3 o'clock you chop it in half and go down to $1 if need be. Because if you're up in the green for the bell rings, get out. Doesn't mean the trade's over. It means you can get back in the next day and ride it up again if it's still a swing. These are much more advanced strategies, so I got to cut myself off there because that's where it gets much more involved. But the point is, there's so many different variables when it comes to exit. And by me just throwing a couple bullet points up here and throwing numbers, it makes it seem so simple. It is not simple. It is not simple in making these decisions. Any of my listeners right now that are in my program, whether you're a graduate or not, you're probably chuckling right now, going, "Damn right, it's not that easy." It's very, very complex on knowing when to exit. But you know the golden rule. If you're not sure, just get out. You take your dollar then, or just exit before the bell. So, and there's a lot of factors involved, especially when we get into earnings season. Oh my God, there's that. I don't have time to discuss that in this webinar, but certainly in my book, I have a whole section on how to trade earnings. And again, that's just the framework, but during earnings, there's definitely more money to be made. So, example from the feature article. Again, I'm just reiterating from this point forward in the webinar, the next probably 6 or 7 charts are all derived exactly from Stocks Commodities Magazine. The 2015 August edition, Fusion Trading, name of the title. You can see this on my website, so I'm going to kind of breeze through, for time's sake, basically the setup. So basically what I'm saying is, if you're watching this now, by all means, go to the website right after because it's fresh on your mind, everything I just said. You'll get the best out of it. Read the article. It explains it in great detail, and then you go from there. And again, even the article is the framework, but it's certainly going to get more out of the article than me just breezing through these slides real quick. This is a snapshot of my trading room for the daily levels. Now, the daily levels I already explained to you. These are derived from the daily chart. That's why they correspond with an exact date. For instance, off to the right here, you've got the 195.50 that hit on 10/30/2/14. Keep in mind, these are all outdated now. We've already traded them. So these aren't levels you're going to trade, tomorrow if it happens to if LinkedIn happens to go up, $5, what have you. These levels are over. I have to establish that. I actually had people in the past that that's exactly what they did. 195.50 has already been traded. So anyhow, these are daily levels from the daily chart because they had the 5 candles minimum to the left and right. That, along with several other rules and procedures, I haven't. And there's no way I can get into that in one webinar. But the point is, I just want you to remember these numbers, see these numbers. We're going to be trading these numbers. And again, this is in the article explained in great detail. The 195.50 is the first tier. You're just going to have to trust me on that right now. It's the first tier, mainly because it held for the 10 days. And as the price was, these are support levels. So that's why you have the 195, the high. So if you're going down through these numbers, 195.50 is your first level you start trading. And if it runs against you, the price, and many times it does, perfectly fine with this system. I don't think I've established that yet. This system is based on not worrying when the price runs against you. In many cases, I'm happy when the price hits these lower levels. I'm ready for it. These are things that I teach. Is for instance, if you can't handle being in the red, then don't trade 195. Trade 185. That's the third tier. Just one example. And just because I'm getting in at 195 doesn't mean you should. Or I'm going X amount of shares, you shouldn't go X amount of shares, and so on. But this whole trade setup is based on trading off that 195.50 first tier swing. And note, it's not here. I believe it comes up. But just note 5% rule. I mentioned that previously. The 5% bubble, if you will. What is 10? It's basically $10 lower. $10 lower is that 185, so it falls within 5%. That's why you have 3 tiers. And then it jumped. The next tier is way down at 160. I make it red just as to signify in the trade room that that one's outside of 5%. So this is just another daily chart. This shows you, just remember these numbers here, 185, 187, 195. It's all 3 of these numbers right here. These are real levels. They were traded at one point, so that's why if you read the article, you can back test it, get a feel for how it works, just get a much better insights into the whole fusion system here. But in general, right here, just note the chart. You have the 195 levels here. I know it's hard to see, folks, but it's the only way I can describe it. But this did have, in fact, 4 days to the left. It probably had 30 days to the left. To the right, it had almost 6 months to the right. Clearly a support level right there, 195.50, and 187, 184. So that's the daily candlestick chart. That's where those numbers came from. So I'm just showing you that's where they came from. I didn't just pull these numbers out of the air. They're real levels on the daily chart. The daily chart is the strongest, in my opinion, the strongest candlestick chart. I actually use weekly charts sometimes. Why? Because some stocks like IBM and Goldman Sachs that I trade, they have levels that are still relevant to this day that were hit back in 07. So you have to size your chart to weekly, and I have strategies for that. But in general, to keep it simple, daily chart has daily levels that are critical. Now, this is my whiteboard. I literally call it whiteboard. But this is what, again, would be up on the wall like the picture I showed you on the day that I was going to trade. Now, remember, the first tier, point at 195.50, first tier swing. Remember the golden rule? Wait till you get within $3. Let's go back here. I believe, yes, this shows, this chart right here, this is actually, I don't know if you recall, during the earnings of LinkedIn where it literally dropped $70, what have you. It sliced through all these other levels. Good thing we're on the sidelines, folks. Good thing. Because the system says you wait on the sidelines, especially during earnings or after earnings. But anyhow, the point is it dropped, so the very next level was the 195. And it certainly held for 10 days. Again, 6 months. So the point is we're waiting for 195 to hit. But notice that even after the gap up here was at 210. Even up there, we weren't trading. There's no other level. There was no other level other than the 195. So it was $15 off. That's why we didn't start trading until it came down. Down to the 513 Wednesday, 2015. And that's why in pre-market, it opened up at 196.87. Or that was the low anyways. It was within $3 of the swing. That's the whole point. So now that it's within $3 of the swing, you can start trading your support, your swing level of 195. All that, yes, I know at this point many people are scratching their head, particularly anyone who's first time ever being exposed to this system. Again, I definitely encourage you to go to the website, read the entire article. It does a much better job than me just breezing through here. So the point is we can now trade 195.50. So let's trade it. Keep in mind, this is still linked in. This is on 514. The pre-market low is 196.87. You got a line here. Now, this is where I want to remind you. We are going to be entering, just to fast forward out, we're going to be entering after the swing hits. So we're waiting for 194 to hit. So just keep that in mind. In other words, when you get more advanced in this system, you could actually start trading out the pre-market. You're just risking that you aren't going to be able to hold that level overnight. I don't want to get too much into that now. I just want you to know you do have those options. But when you're first starting off, and especially when it's a first tier, but you really shouldn't even be trading when you first start off. So at least wait till it hits. So I'm just pointing out that pre-market was at 196.87, meaning it was above 195.50. So we got to wait for it to come down, come down, come down. So again, you're just on the sidelines waiting. Here it is. Remember, this is the same day. It was way up here, where it starts off, comes down, doesn't hit, finally comes down, 194.50. Now keep in mind, 195.50 is the actual swing level. I'm showing the entry. That's why it says enter, $1 passed right here. Because remember, one of the rules, in general, you get in $1 pass. In this particular case, it would have been exactly $1. Most of the time, it really is. But of course, you have to know where your swing is. You don't just pick a level and go, I'm going to go $1 past it. Believe you me, that is not what this system's doing. I'm pretty sure at this point, at least you got a gist of, there's a lot of work that went in thus far to get that 195.50 level. So we got it. Now what do? We enter 194.50. Remember what the profit was? $2. So we're looking for 196.50 as an exit. Let's follow and see what happened this day. Of course, it drops, what, a few dollars below, or at least $1.50. As soon as you got in this thing, it just dumped. That is perfectly fine. You're looking for your $2. If it goes lower, remember the other levels? You'll be trading 187, 185. Now, I know there's a big gap here, and I always get that question, what do? That's why I'm going to be telling you when you start off, you shouldn't have traded the 195. You wait for the 187. You're going to find, though, that most of the time the first tiers do reverse, and that's pretty much what happens in this trade setup, but it does take a couple days. Anyhow, let's keep going here. So the 194.50, you're looking for 196.50. It goes down to only 192. Remember, it didn't hit 187, so there's no second entry yet. You're still holding. Then it goes all the way back up, all the way. You need 196.50. Look at that. It's horrible. It came within 50, 60 cents of hitting this day. And then it went back down. This is normal. I believe it's one of the hardest things for me to train people. And this is why it takes months to get used to this. Because you'll get so caught up in these intraday swings, you'll get frustrated, and you'll just stop loss, or you'll get out with a smaller profit. You wait. Guess what? It closes at 190, pretty much your entry, 194.45, coincidentally. That actually happens quite often. That's why these numbers are spot on most of the time. Now, 194.50, you're holding overnight. It's a swing. The next day, the 15th, it went up to 195.94, only went down to 193.20. So again, hold for another day. And this is a good time for me to remind you that swings, when you enter them, some of them will profit in 10 minutes, but it took you 2 weeks to wait for it. Some take a few days to wait for it, but then you're in them for a couple months. Believe you me, that does happen. Now the question is, did you wait for the $2 profit? That's what we're doing right now, so we'll stay on target. All I'm just pointing out that there is no exit, so don't exit. 195.94 was the high. We need 196. So now, let me just make sure we're doing this right. The dates for your own. Yeah, notice it was 5:15. I believe that's a Friday. So this was holding to the weekend. Again, normal. There's no not holding to the weekend. It depends on the levels. It depends on a lot of factors. But in general, if it's a swing, you can hold it. Now, so this held in the weekend. Come Monday, here we go. Look what happened here. This is where it gets really interesting, and this is the fusion, the heart of the system. It gapped down, folks, another $3, and pre-market low hit 191.80. Remember the rule, golden rule? If you're within $3 of a swing, then you can start intraday trading. It just turns out, let's go back, that 187.60. That's your next swing. Let's go back. Pre-market opened up. Yes, it's $4 off. And this is, again, I use this example just to remind you it's not always $3. In this case, it was $4, but you can start swing trading. Plus, you're going to go 50 cents past and get in at 191.30. What we're doing here is we're going to start intraday trading into the second tier of that 187 level. That's why you can trade the pre-market here, because you have a second entry. Remember the other golden rule, don't enter your first trade unless you have a second entry. There you go. It's all starting to fit in here. So now keep in mind, you still have 100 shares of your swing, and you're down, you got in at 194.50, so you're down a few $100s at this point with your one position. That is completely normal. Now, pre-market hits, you get in 30 cents past, and remember, you can backtest all this. This is all real levels. This isn't a made-up chart. And these are all levels that you were planning to trade before they hit. So there's no reverse engineering in this system, you know, or hindsight 2020. This is the real deal. So you get in at 191.30. Now you have 200 shares. That's the fusion. You just fused an intraday into your swing, and you can ride that for $2. But in this case, you can get more than $2. Because remember, the $2 profit up here, where I'm circling, is the 196.50. That's your exit, not $2 from 191.30. Your exit is 196.50. You now have 200 shares. What you got in a 191.30 and 194.50, which your average is 192.90. And you happen to get in down here, yeah, and it happened to be right at the bottom. And this is very typical when you're trading off pre-market. It usually bounces real nice like this. And it just happened to be a perfect day for the fusion. And this is very typical. It's not like it's a one trade I'm just cherry picking. This happens over and over again. So what happens is you got 200 shares, you exit at your 196.50. The trade's over. There you go. And if you've done the math, what do you got? Probably like $350 profit if you're counting your pennies here. Yeah, it's more than the $2, and that's why I said $2 plus. I know there's a lot of questions you have at this point, and again, read the article. If you already read the book, you pretty much know all this already. But definitely read the book, and certainly these are things I teach in my training program that take months and months for you to really gather. What I'll do real quick for time's sake, I know we're going over. I'm just going to real quick pull up my. Give me 2 seconds here. Let me see. Give me 2 seconds. I'm pulling up the trading room just to give you quick, real fast, super fast, just so I can show you the. Oh, let me see. Remember, there's 2 sections to my trading room. We have the daily chart levels, which, give me a second, for some reason this is in my way. Right here, give me a second. Basically, when I'm scrolling down, you'll see Baidu, Apple. Yes, Apple's one of my stocks, newly just added it. It's over 100 and below 250. Tesla, IBM. The key here is, let me just get a good screenshot here of where. Basically, Goldman Sachs, here's a good example. You'll see the left column is your highs and all the dates. Your right column is all your lows. These are all derived from the daily chart. Some are highlighted, some are not, just to give you an example of how it works. You'll note that right now the 161.53 is highlighted. Do not, I repeat, do not go trade this level simply because you just saw this webinar. But yes, the 161.53, we're waiting for that level to hit. That's the first tier support. I'm just showing you real quickly how that works. We go over to the swing room. Give me a second. Swing trade, and this is showing strictly the swing trades. And you'll see here that I've got the current trades. They're either in now or recent, and it shows basically everything that you need to see. Let me scroll down. Just give me a second. It's so temperamental for some reason. Scrolling. Just as an example, they're all the same, so it doesn't matter. You have your first entry, the date, the time, the shares. If you're gonna get a second, third, fourth, many of them you may not need a second entry, but I give notes on it, and ultimately it's your entry and your exit. And in this case, there should be 200 shares here. For some reason, it's not in there, but it doesn't matter. It was a 200 share setup. Oh wait, no, actually no. That's a great example. It took $4 profit. Because it missed the first entry, so in other words, you actually entered off a second tier. I know I don't want to get too much into it, but any of my graduates, they know exactly what we're talking about, and they probably made this trade. Anyhow, just to keep scrolling down real quick, you got the future setups. This is what sets my trading room apart from virtually any other trading room I've ever seen, is I have the levels out here that you know ahead of time. Now, when I say ahead of time, just to give you an example, let me try to center this a little better. these are all your levels you're waiting for. There's no guesswork. There's no hindsight 2020. That's why, like, for instance, Apple waiting for 104.63 to come down and hit first tier now. And we traded it previously, so it's grayed out over here. And you'll note that it says all within $3 of the first tier. So these are levels that we're waiting for them to hit on the sidelines. We're not guessing. And when they hit, you get in, you get out. And that's pretty much it on a nutshell on how the trading room works. I certainly could usually spend, when you're in my training program, I spend like 3 or 4 hours just explaining how to use this room. So bear with me if you're just getting the gist of it super fast here in just 1 minute. But for time's sake, yeah, you got the trading room, has all the levels in there, everything I just showed you. And there's that. And what I'm going to do now is pull back up and get back in and basically start to conclude. And this is where if you start having questions, Rob, I'm pretty sure you're already there. But I've got just real quick my training program. There's no need for me to discuss it here. It's all on my website. But yeah, in general, I have a 1-year training program, and that's the only thing I like to focus on when I describe it. The bottom line is, if you're going to learn any real profession, a real system that works, it's going to be a complicated system. There is no golden goose strategy to learn it. It's going to take time. And my program is an entire year because it takes you a long time to really digest and get in rhythm with real day trading. But also, the underline there, earnings season. The problem is most trading systems work great until earnings hits. So I allow 4 experiences of using this system, 4 times with 10 stocks. That's more like 40 times. If you have 10 stocks, you're going to experience this system while under my mentorship. So, and that's very critical. So we're at a point now, it's questions, Rob, and I'm just going to leave my last frame up here if you want to tune in. I'm at the point now that we can start taking some questions.
Great, everyone. Feel free to start typing them in. I'll pass them along to Josh. Josh, can you also see the chat box on your main window that has the access to the screen sharing?
You know what? Let me hit escape. I think that's on a separate window. Give me a second here. 1 second.
If you expand that main bar there.
I think what you're saying is this page right here. Nope, it's not that. Oh,
the actual like screen sharing tool.
Oh, gotcha. Let me see. Yeah, I've got it, but can you see this chat box? Yes, 136.
Okay, perfect. So I could type in.
Yeah, I got you. I can see it right there. Sure, definitely.
Karen.
And now that I got it, let me pull up go ahead. I'm going to
Sure.
just pull this back up in case there's a question referred to it.
Sure. So guys, feel free to type in some questions here. Karen just wrote in. She just ordered your book from Amazon. She says thank you. Carlos, thanks for the presentation and content. And guys, definitely feel free to speak to Josh directly, give him a call, and visit his site to learn more as well. And you can definitely email into Lightspeed. We'd be happy to pass on any emails directly to Josh as well.
So, yeah, if I don't see anything popping up right away, and believe you me, I'm kind of used to it because after a good webinar like this where I'm throwing literally the entire kitchen at you, including the sink, there's a lot to digest. And again, definitely go to the website. If you have time, grab a beer, sit down for a good half hour, and read particularly the feature article. I have snapshots of it in there where you can literally blow it up and see the actual image of the article with everything I just showed you, the exact same setups. And after reading that, definitely feel free to get in touch with me. Currently, my website's under construction. You can't email me. We're building a new email way to contact me. I'm having a lot of spam issues, as you can imagine. But yeah, you can call me direct. Of course, if you buy the book, by all means, go on Amazon and throw up book reviews. You can create discussions and what have you. Other than that, definitely feel free to ask any questions. And it looks like right now, let me see what we have here. Can I enter long trade for LinkedIn if market is dropping? That is such a generalized question that I'm always going to tort back and ask you, well, what levels are you trying to trade? I know the levels I'm going to be trading, and I can show you what levels they are. But yeah, when the market's dropping, that doesn't mean anything to me. That's my response. And matter of fact, you'll learn the more you get in tune with this system, you need to shield yourself from the market. I can't tell you how many times the Dow drops 400 points, but my level hasn't even hit yet. Because again, we're counter trend trading. I'm waiting for it to drop $15. So when the market's dumping, that means my level is probably about ready to hit. And just because the market's dumping, if you don't get in on that level, you're probably going to miss the trade. So that's the long version of answering your question.
Great. Then Lucy wants to know where she can view the recording of the webinar. It will be available on the Lightspeed website. Josh is also going to post it onto his website, daytraderjosh.com. So you'll be able to view this webinar on either site within a couple days. We have another one here. Josh, I will pass it on to you right now.
Where do you find the pre-market data for the stocks you selected? I'm not sure Fidelity gives it. Yeah, as I said previously, quite honestly, I'm not familiar with Fidelity, but a lot of the online traditional brokerages today are now offering it. 5 years ago, no. But in general, yeah, you absolutely need it. I've already established that. But the best advice I can give you for free, believe it or not, Google Finance now offers pre-market. It's not exactly the most accurate, but at least you have it for starter purposes, especially when you're just paper trading. And if you want to just do some back testing with the system, you can use it for that. But my advice is always call your broker, because I'm not a broker. You got to ask your broker about your pre-market data.
Absolutely, Steve. Feel free to contact Lightspeed, and we have a lot of different trading software that provides that pre-market data. Bill asked about what are the pre-market trading hours. I mean, Lightspeed Trader starts at 4 a.m. I don't know what time, Josh, you start looking in at the markets.
Yeah, actually, all stocks, if you're hitting levels at 4 a.m., definitely you use them if it's the low. And typically, they won't start at 4 only unless it's a very active day. And it's typically going to be like the day of earnings. You'll see a lot of activity at 4 a.m. But it doesn't mean you have to be up at 4 a.m., mind you. That would be 1 a.m. in California. So the point, though, is, yeah, whatever the pre-market high and low is, you need to be aware of it. That's the simplest version. If you're not aware of it, you shouldn't be trading that day. Now, another way I can say it, advice, there's always golden advice. It goes back to being risk adverse. If you don't have pre-market data or you're not sure what the pre-market data was, then don't trade. That's simple. There's other stocks then that have pre-market. And this is one of the biggest things I teach a lot of my trainees. They make the mistake of pre-market, didn't see it, or they missed one little dot on the screen, what have you. Well, you're going to make mistakes, absolutely. But if you don't see the data that day, then just you can't trade.
Right. And, yes, Bill, you may see that 4 a.m., that's what's offered at Lightspeed for start of pre-market trading. So if you're somewhere else, you definitely want to look into switching over maybe to Lightspeed, since we'll give you that extended hours. Let's see. Victor asks, how big of a loss do you take when stock goes against you? I'm sure there's a lot of different parameters in that for you, Josh. A little open-ended.
Absolutely. No, I'll tell you, I'll word it this way. Any stop loss, when you're talking about stop loss, I call it strategy stop loss. There's never a nominal value I exit at. In other words, if I'm down $2, I get out because I don't like being down $2, for instance. That never is the case. Because of all the rules I just threw at you, it makes absolutely no sense to stop loss when you have other levels that are even stronger to trade. The question is, how many shares are you holding? Are you holding margin into after hours? These are things that you have to decide on shaving off your position. Don't perceive it as a stop loss, though. That's pretty much day trading 101, and that's where it gets more involved. And I can't tell you how many shares to buy. I can't tell you these things. Ultimately, you need to make that decision for yourself because I don't know your bank account. So, and that's why it's hard to, I'm just here to show you the ropes. I'm here to show you the map, but ultimately only you can ride that road, you know, and that's what it boils down to. I know that's not the answer you want, but bottom line is you can lose a lot if you're not trading the system properly. That's absolutely, and I can give you 20 horrible examples. For instance, holding in the earnings. If you don't know what you're doing, you certainly should never hold in the earnings. It doesn't mean that you never hold in the earnings. It just means that you should never hold in the earnings. So there is a reason to stop loss. If you're in a position, say you're down $4 and you have 200 shares, you got $800 in the red, earnings is hitting at 4 o'clock today on your stock. You get out of it. You're going to take an $800 loss. But what then I'll show you is if it dropped $20 more, and the next day opens up $20 more lower, you're just going to get right back in and ride it back up for $20. You just made $2,000, so you netted $1,200. This is just an example. It's all about the net. So yeah, but in general, losses. If you read my first book, I've had some severe losses going back, 10, 15 years ago. Who hasn't? Stay away from penny stocks and don't ever buy Enron. I've got a question here. I understand that your trading system is more mechanically and rule-based. Do you use alarms for multiple stocks that you're that one? That's the whiteboard. Honestly, there's two ways I can answer it. If you're a full-time trader, your alarm is your eyes. Point blank. You're watching it all the time. If you're at work, absolutely. You're going to be light trading one stock. You're waiting for the swing to hit. Sure, you can make your buzzer go off if you have that capability to trade from your phone or a laptop. And I have several people in my program. They're literally, they're contractors or they're real estate agents, and they sit there and they work and they also swing trade. But they're not actively fusion trading. It really just depends on how much available you are. And that's something I didn't express earlier. Is this system, you can mold it to what works for you. For instance, if you don't want to fusion trade and you don't want to be there all day in front of the screen, then just wait for a fifth tier to hit on, say, Tesla, where it drops out there $50, and it might take 4 weeks for that to happen. Then just trade that one position. You're not going to make as much, but at least every trade you're getting in has a much higher potential of profiting. So it's just the more you apply yourself, the more trades you're going to make, bottom line.
I had one from David right above that. Do you see that one?
John, no, let me scroll here. No, above it. Oh, yeah, for some reason it's hard for me to see these.
I can
enter long. No, wait.
I just resent it.
Oh, there you go. Therefore, the strong point of the system that ignores the market noise, sounds like someone who's read my first book, of the news and the Fed comments and stays with this price support resistance point of each equity. I'd never say, even if anything, you didn't have to capitalize ignores. I would have picked that word out immediately. You don't ignore any market-related news. You just don't let it dictate the system. But you need to be aware of all news, absolutely. But if you're really not comfortable, and I teach this, if say you're just not comfortable, you're still learning, by all means, just exit the trade then. And if you're trading it properly, you're not going to be that much in the red. It just depends on what levels you're in. Like when the Fed comes out, does that mean you should just exit your position before it comes out? Sometimes, yes. It just depends. But absolutely, you don't ignore everything. I keep the CNBC Business Channel on at all times throughout the day. I call them the talking heads. I'm only keeping it on in case some major breaking news hits. But guess what, folks? The charts will tell you it's already happening, usually 3 minutes to 10 minutes before they find out. Because what I'll be showing you that I didn't have any time nor to even attempt to do it is how to read volume. When you see volume do certain things, there's a lot to learn from volume. Well, that's the short version. Volume is your news. There's your answer.
Great. Cornell would like to know how long did it actually take for you to refine your system?
Honestly, like any real day trading system, you're constantly adding, subtracting, reinventing, molding. I mean, it's a process. Yeah, it's a process. It's always gonna. But the one factor that never changes, and that's why I started off with it, is the reverse counter trade. That's something that never will change. I'll never see me just one day go, you know what, I'm going to start going with the trend. I'm going to just start going buy long into an uptrend. Good, you'll never see me do that. That I can promise you. But the things that change are the things that need to change. When stock prices are going higher, you need to adjust a lot of the rules. I'm constantly readjusting, reevaluating, and trying to make it to where it is less work, more money, if you will. That's the whole point. Less work, more profit. But less work means sitting on the sidelines. That's why honestly though, sitting on the sidelines it sounds glorifying, but it's really not. I can tell you, it's really nerve-wracking when you got to sit here for days waiting for a level to hit. But again, that's why I trade up to 10 stocks. When one isn't hitting, I got 3 other ones hitting that day, or maybe every week on average, for instance, you probably have at least 5 swings hitting. So every day on average, you got at least one trade, whether it's a fusion or a swing. So I went off on tangent on that, but honestly, I'm constantly reinventing myself and the system. And if you're not doing that, your system will fail.
Absolutely. Okay, do we have any other questions here? I got one more. Let me just shoot through. I think that we might be wrapping up here for the day, but we'll stick with one more here.
And let's see. Oh, do floor traders pivot levels affect your trading method or simply use support? Do floor traders, I'm not sure. There's about 10 different ways I can read into that. But again, I'll just answer. Go back when you learn about the daily chart. I can tell you this: I didn't invent those levels on that chart. I'm not the one with billions of dollars on Wall Street that decides where those levels pivot from. We're basically, I like to say it where I say it in the article. We're basically riding Wall Street's coattails and picking up the breadcrumbs they leave behind, because those breadcrumbs are about waiting for them to make their big moves, and then when they're done, it's the little reversal of a couple bucks. That's all you want. The system fails if you try to get more than $4 a day. The system fails if you're constantly making up profits or speculating. I mean, it's all about consistency. And any trader on Wall Street, especially with my experiences when I used to trade on private equity trading floors, the guys that did good, they did the same thing every day. That's where I got the system from, constantly being consistent. Same stock every day, same system, same rules, same exits. And then the more you do that, the more in tune you get with the system, any system for that matter. So yeah, basically, floor trader, I was one, essentially, on private equity floor. Are you talking about the NYSE? You can hear a pin drop nowadays when you go there. Everything's online, and all you need to do is know how to read the daily chart. It'll tell you everything.
Great. Okay, I think that will pretty much take us to the end of our time here. Josh, we want to thank you so much for spending some time with us. We definitely want to schedule something else again in the near future, so let's everyone be on the lookout for some more webinars from Josh, and look for his book and his program on his website, and feel free to contact him or Lightspeed at any time. And hopefully anyone has questions, just send them on through, and we'll pass them on to Josh. So Josh, thank you very much, and everyone, thanks for attending here today.
Yeah, it's been, as usual, it's an absolute pleasure being working with Lightspeed. You guys always throw together great webinars, high resolution, everything's good. So like Rob said, you can find it on Lightspeed as well as my website. And Rob, I'm pretty, just for their sake, it won't be on my website till probably next week. Usually takes a week before I get the feed.
Sure, I'm sure for us too it'll be a couple days. So,
yeah,
but
I didn't want to think of being on there tonight or something. So yeah, it'll be there next week. And in the meantime, read the article that this entire system is based on. Stocks and Commodities, 2015 August issue.
Great. Okay, thank you very much, everyone. Have a great night. Josh, have a great night as well, and we'll be in touch.
All right, take care. Bye-bye now.
Thanks.